owning a home doesn't just give you a roof over your head. It actually comes with some meaningful tax benefits as well. I'm Pam Wandry with Columbine Mortgage, and we're going to take a look at some of the tax benefits of homeownership. Now, I am not a CPA or a tax professional, so please consult with your tax professional to see which of these actually apply in your situation, but we're going to cover some high-level ones that would apply to most people. First is that mortgage insurance is deductible. So each month when you pay your monthly mortgage payment, there's that interest portion, and that after the end of the year, you'll get to deduct all of that interest paid from your taxes. You can deduct from your primary residence, your second home, and even your HELOC if those funds have been used for a home improvement. Those interest payments can be deducted up to a loan amount of $750,000. Second, property taxes and state and local property taxes can be deducted. So that state income tax that you paid, that can be deducted, as well as any property taxes can be deducted. So SALT, that used to be capped last year at $10,000, and this year it's gone up to $40,000 maximum amount deductible. So not a small sum that can be deducted from your taxes, which is great news. The next first-time home buyers, you too get these benefits of tax deductions. So when you close on a home loan, if you closed last year in 2025, you can claim it on your taxes this year. On that CD you got, it should have these line items. There should be a prepaid interest. So if you paid any interest up front, that will be deductible. If you have property taxes that you potentially brought in at closing, those would be deductible, as well as if you chose to have any discount point fees or buy down that interest rate a little bit, that too potentially can be deducted from your tax returns. So great tax benefits and savings for first-time home buyers right off the get-go. And then, of course, on the flip side, if you are selling the home, when you have those capital gains, if you're filing as a single person, you can deduct up to $250,000 of those capital gains from your taxes, and up to $500,000 if you're filing jointly with your spouse. Now, since we've seen a significant amount of appreciation in the Denver metro area over the past few years, you likely do have some appreciation in your home. So this deduction greatly helps reduce those tax hits that you might have from any net gains. Also, obviously, when you rent or own a home, they kind of look the same when you're just paying out a monthly payment each month. It looks the same on paper. However, when you're a homeowner, you have a great amount of tax benefits, and whereas you don't when you rent. So let's take a little bit of a look about that. So when you're renting, you're just paying that monthly payment each month, and no interest is able to be deducted because that's not your mortgage payment. Whereas if you actually are the owner and you're paying each month, that interest that you pay each month would be deductible. As a renter, you have no equity growth in your home. That is all owned by the owner that you're paying the rent to. And whereas if you're the mortgage owner, and paying the mortgage, you will get some equity each month when you pay down that principal balance. Same thing for appreciation. There is no appreciation for a renter. But when you own the home, any appreciation from the time you purchase till the time you sell is yours to keep, minus the taxes you might have, unless you have less than $250,000 in capital gains. So good to know those, right? Also, there's no property tax benefits. So if you're paying property taxes when you own the home, obviously you can deduct that, but you're not paying the property taxes as a renter, so there's no deductions there. So overall, huge tax benefits for owners. If you have questions, don't hesitate to reach out. That's what I'm here for. I'm happy to help however I can. Look forward to seeing you next month, and I'll talk to you soon. Bye.